Okay, good morning once again. We're going to continue our discussion on financial statements and ratio analysis. Quick review. What we have done so far is to learn how to do a vertical analysis where all the accounts are benchmarked or compared with a particular account. If it's income statement, it's it's compared to sales. For the balance sheet, it's compared to the total assets or total liabilities and equity. And then we also looked at horizontal analysis. This is a year-on-year comparison. We're looking at the growth rate, growth rate of an account in comparison with the previous year's value. So that's your horizontal analysis or your growth rate. Okay. And then we said that when we look at financial statements and their ratios, we do not just uh, we do not just evaluate a particular value, whether it's a ratio, whatever ratio it is. It's always benchmarked against direct competitors and benchmarked against time. Okay, so we learned how to create the statement of cash flows. We learned about some measures like NOWC, TOC, okay, free cash flow, ROIC, MVA. We have already learned how to do those to compute for those. And then at this point, we're looking at different types of ratios. So generally, there are 5 types of ratios. There are others, but we're just focusing on the 5 most important ones: liquidity, asset management ratios, debt ratio, profitability ratios, and market value ratios. So we have looked at liquidity and asset management ratios. I think we have completed all of this. Okay, so just a quick review. Liquidity answers the question, how capable is the firm in paying its current obligations as they fall due? So yun ang liquidity. Okay, the higher it can be in the form of a current ratio or a quick ratio. Okay, now the higher the value is, just indicates that the company has more of its current assets to pay its current obligations. Now, a very high current ratio does not necessarily mean that it's good for the company. Okay, does not necessarily mean that the company is performing well, because, for example, in an industry which is, let's say, focused on operations or productions, machineries, okay, maybe the bulk of its assets is invested in property, plant, and equipment. So if the company, let's say, is very poor in terms of FATO, okay, and very high in terms of current ratio, perhaps it's suggesting that the company is heavily invested on current assets, okay, and lacks investing in fixed assets or property, plant, and equipment or machinery. Okay, so we don't look at ratios in isolation. Usually we look at it in tandem. Okay, we look at it holistically. For example, last time we looked at ITO, ARTO, and APTO. Okay, we looked at the individual significance of these ratios, or the days in inventory outstanding, days sales outstanding, days payable outstanding. But we were able also to look at a combination of this. No? A holistic figure will be the operating cycle, which is a cash-to-cash cycle. It tells us how many days a company is able to buy raw materials, convert to finished goods, sell, and then collect. Okay, so like in this company, it takes them 134 days. And that pales in comparison with the direct competitor, 84 days. And the operating cycle consists of at least 2 ratios, right? The DIO and the DSO. And then the cash conversion cycle takes into account 3 ratios: DIO, DSO, and the DPO. So these are examples of ratios being combined in order to provide a better picture of the operations or the performance of the firm. And this ratios, these measures are compared against time and compared against their direct competitors. Okay, I think we looked at FATO, and also our TATO is your net sales. Net sales, I think we did this last time. Net sales divided by your average total assets. Our total assets is here. Okay. All right. Am I right, class? Could you kindly chat if we were able to compute already for FATO and TATO? Kindly chat, please. Yeah. Okay. Thank you. All right. So we looked at the meaning of this. For example, let me write the formula here. It's net sales divided by average PPE, average fixed assets. This is your average fixed assets also. Depends on the account being used by the company. And this one is net sales divided by total assets. The average total assets. Okay. So what does this indicate? Just by looking at the figure, for every 1 peso of fixed assets being used or invested in, the company was able to generate 7 pesos and 90 centavos of sales. Okay, and they performed better than the direct competitor. Okay, unless nagkamali ako dito. Well, if that's the case, if this is 7, then the company performed better in 2021 relative to their direct competitor. Okay, however, in terms of total assets, yeah, the direct competitor was able to generate more sales for every peso of total assets. So overall, the direct competitor was performing better compared to our company, compared to this company, which is generating a data of 2.2. For every 1 peso of asset or total asset, the company was able to generate sales of 2.2, while here the direct competitor was able to generate 2.5 sales. Yeah, you know, I suspect that I copied this wrongly. Okay, because from what I recall, the direct competitor was performing well as far as the FATO is concerned. But let's just leave that as is, okay? So that we have a scenario where our company was performing better than the direct competitor. Okay, let me pause for a while. So far, is that clear, class? Okay, good. Thank you. All right, thank you so much. Thank you for your responses. Okay, good. All right, so let's move on. Okay, how about debt ratio? What is the formula for debt ratio? Debt ratio is your total debt, total liabilities over total assets. It's the proportion of your assets that was financed by. Okay, thank you. Yeah, Raj, correct? Yeah. Jeremy, correct? So that's total debt over total assets. So let's compute this. So this is equal to, let's see our total debts here. Total debt is balance sheet. Okay, so we see that our debt is separate. So that's the sum of your current and long-term debt. Okay, and then divide it by the total assets, which is, let me get that from here. Okay, or I could have used this. Okay, then copy to the right. Okay, so we can see here it was quite volatile, the movement of the debt ratio. It was 54%, around 55% in 2019, and then it ballooned to 80.7% in 2020. Now, what could have caused this? The increase in debt ratio. If you take a look at the balance sheet, we'll see that there. No? In the balance sheet, what really increased? Okay, we can get it here from. Okay, let me just decrease the width of this. All right, long-term debt from 323 to 1 million. Okay, so you can see here the big jump. Although total current liabilities went down, yeah, also there was also an increase in total current liabilities. So liabilities, current liabilities went up by 1.75 times, and long-term debt increased by twice, more than 2 times, 2.09 times. So there was a big jump in these figures. Okay, bakit 2 point ano lang? Wait, let me check the formula. Tama naman. Okay, so there was a huge increase in terms of long-term debt and in your current liabilities. Hence, the debt ratio really ballooned from 54%, and then it became 80.7%. And then there were payoffs in 2021. That's why it went back to 43%. So if you take a look at, again, our balance sheet. So from the 1 million, it dropped to 500,000, which means the company paid off some of its debt. Kaya yung 1 million naging 500,000 na lang. And also, current liabilities went down from 1.3 million naging 1 million na lang. Okay? So they were the movements as far as the debt is concerned. So which made it at 43.8%. Okay, so is this a good, which means, class, that 56.2% is your equity. 56.2% is your capital ratio, okay, which is your total capital or total equity divided by total assets. And again, it begs a question, is it good or bad? Okay, we cannot answer that way. We can only, we have to compute for the, and see the optimal capital structure and then compare it with that one. Okay. On the other hand, our direct competitor is just about 50-50 as far as financing its assets is concerned. Okay. All right. So now let's go to another debt ratio, which is times interest earned. So the TI ratio tells us the capability of the firm to pay its interest obligations. So let me put here capability of firm to pay interest obligations. Okay. Kaya ba? Can the company pay its interest obligations? Yung hiniram nila sa bangko, hiniram nila sa other credit institutions, kaya ba nilang bayaran yun? Kasi yung borrowing sila, it incurred interest, di ba? The question is, can they pay for it? Okay, we can use the times interest earned, which is equal to your EBIT, earnings before interest and taxes, divided by your interest. So we start with the EBIT, no? That's your earnings before you deduct interest. So from the EBIT, we're going to pay off the interest. Ilan yung ratio na yun? Ilan yung proportion na yun? So let's copy it from our income statement. So we have here our EBIT divided by your interest expense. Okay. All right. We can see here the capability of the firm to pay its obligations. In 2019, the company had, for every peso of interest expense, the company had 3 pesos and 35 centavos of operating profit. So which means theoretically the company should easily be able to pay its interest obligations. No? Kasi sa bawat piso ng interest expense, meron yung company 3.35 na operating profit or EBIT to pay its interest obligations. However, in 2020, and that was the effect of a big increase in the debt, no? 10.10 lang. Ano ibig sabihin nun? Sa bawat piso ng interest na dapat bayaran ng company, meron lang siyang 10 centavos to pay that obligation. So, medyo talagang dito, problematic siya in terms of interest payments. No? 10 centavos lang for every peso of interest payments na kailangan niyang bayaran. However, they were able to recover in 2021 where they had 6 pesos and 28 centavos available for every 1 peso of interest obligation nila. Okay, among the 3 years, ang medyo ano sila liquid, medyo let's say capable of paying interest obligations was in 2021. Even higher in 2019. And halos pareho lang sila ng industry or ng direct competitor nila. Okay? In terms of its capability to pay their interest obligations. Okay, clear yon, class? Kindly chat, please, if so far if the explanation is clear. Okay, good. Thank you. Thank you, class, for the feedback. Okay, any questions? Feel free to ask any questions, class. Okay. All right, next, another debt ratio measure. Okay, another measure in the capability of the company to pay its fixed cost obligations. No? Itong fixed cost obligations, okay, ito yung regular na babayaran ng company every period, every year or ano. May naka okay. Mute ko lang si Sharon muna, no? Okay. So we have that EBITDA coverage. You know what EBITDA means, no? Earnings before interest, taxes, depreciation, and amortization. So this one, it does not only measure the interest, it also measures other form of payments that are fixed. For example, okay, ano example ng fixed? Interest is fixed usually, no? Kasi pag umutang yung company, naka-fix yung let's say yung rate na 10%. So kunyari ang principal is 10 million. So yung 10% na yan, 1 million yung interest, no? So fixed yan every year. Okay, usually that's fixed. 1 million, 1 million, 1 million yung babayaran ng interest every year. Kung yearly siya. Kung semi-annual, 500, no? Etc. Okay? All right. So ano pa kaya ang ano pa yung ibang fixed payments? Ang ibang fixed payments are lease payments, no? Lease sa rent or some other lease na kailangan bayaran ng company. And we're given here, binigay sa atin yung lease payments ng company. So gagamitin natin yan, no? Asan na yung lease niya? Okay, where is that? May lease payment ito, no? Lease payments, 40,000. So yung lease payment, fixed yan. Okay? So ang tanong natin, how capable is the firm in paying its fixed payment obligations? So kasama dun si interest at saka si lease payments. Okay? So yun yung EBITDA coverage as compared to times interest earned. Si times interest earned, ang tinitingnan lang natin dyan, capability to pay interest obligations. Dito naman, capability to pay, yan natin dito, interest plus lease payments. Ito yung mga fixed, no? So we put here, lakayan ko lang ito, capability of the firm to pay. It's fixed cost, fixed payment obligations. So fixed payment obligations. No? Okay, so how capable is the firm in paying off its fixed payment obligations? And usually interest yan at saka and also lease. No? Okay. All right. So ano yung magiging numerator natin dito? Yung numerator natin, okay, kasama dun sa ano, ang kaibahan nito sa ano, ang kaibahan nito sa times interest earned is here, we're basing it on EBITDA. No? EBITDA, and then we have to add back yung lease payments. These payments mismo. Kasi when you go to EBITDA, na ano na yan, na-deduct na yan. No? So, we have to add it back para malaman natin kung ilan yung kaya talaga ng firm na bayaran. No? So, we will have to add back EBITDA kasi sa EBITDA, natanggal na yung lease payments. Eh di ba gagamitin natin yung amount na yan para bayaran yung lease payments. So dapat i-add back natin yan para malaman natin kung gaano ba talaga yung amount na available para mabayaran si interest at saka si lease payments. So this one is equal to, we will sum natin si EBIT, okay, earnings before tax, EBITDA, no? So EBITDA is, saan si EBITDA? Okay, so that's your sum ni EBIT plus depreciation. Okay, so this is sum of EBIT plus depreciation that will now be your EBITDA. No? And then plus, isasama natin si, ba't ba ako nagpa-plus po? Okay, sorry. Sum ni EBIT, depreciation, and si lease payments. And lease payments is andito. No? Okay. So far, that's the sum ni EBIT plus the depreciation and amortization. So you'll have here your EBITDA and then your lease payments. So that will take care of EBITDA plus lease payments. And then we sum also yung mga babayaran na fixed payment. No? Sum ni interest. Okay, babayaran yung interest. Babayaran si interest and also si lease payments. Okay, so yan. So let me give you a few seconds to work on the formula. Okay, and when you're done, kindly chat, please. C9 is your EBIT. C7 is your depreciation. So when we add depreciation back to EBIT, you have your EBITDA. And then add back your lease payments. And then what's to be paid? What are the fixed payments? Interest and lease payments. Okay, waiting for your chat, guys, if you were able to get it. Okay. Okay, good. All right. Okay, so 5.52. And we can copy this to the right. Okay. So here, we can see that noong 2019, the company capable sila no, na bayaran yung fixed cost nila, mga fixed payments sila. No? Fixed payment obligations sila, 2.61 for every peso of fixed obligation, fixed payment obligation. So sa bawat piso ng, in this case, lease at saka interest payments, meron yung company 2.2 pesos and 61 centavos. However, ito nag-suffer na naman, talaga siya nag-suffer siya noong 2020, but it was able to recover noong 2021. Okay, so ito yung progression nila, no? Okay? More capable siya in 2021 kasi for every peso of fixed payment, fixed debt, no? Fixed, what's the term for that? Fixed debt payments, fixed payment obligations. Okay, fixed payment obligations. It had 5 pesos and 52 centavos. Okay, but in terms of capability to pay that, they pale in comparison with the direct competitor. Kasi si direct competitor 8 pesos no? Sila 5 and 5.52 lang. Okay, good. All right. Okay, so these are the debt ratios that we were looking at, no? Debt ratio, okay. Again, class, maganda ba tong debt ratio nila? 'Di ba ang answer natin diyan, the debt ratio that optimizes shareholder wealth is the optimal, it's the best debt ratio, and there's a way to compute that. Okay, but it's really outside the province of this course. So hindi natin, kasi medyo mas advanced na finance topic. But just be aware that that's how we determine if this debt ratio is okay. Okay, and also qualitatively, alam natin na may advantage itong 80.7 na to. Ang advantage nito, it's able to use other people's money to fund its projects. The disadvantage is that the company might not be able to service its interest payments. Okay, and the company will also have difficulty borrowing again. If there's a good project that they want to invest in, baka mahirapan na silang humiram kasi medyo leverage na sila, di ba? Highly leverage. 80 sa bawat 100 pesos ng assets nila, 80 pesos of that is financed by creditors, yung mga nagpapautang, and around 20% lang yung financed by the owners of the business. Okay, so again, advantage and disadvantage. So advantage, it's able to borrow to finance its projects, to finance its investments. So that's a good thing. Okay, and also we know that leverage offers the company, okay, di ba, tax savings yan. Kasi mataas yung interest, bababa yung taxable income. From your EBIT, ileless natin yung interest. You have your taxable base, no? Taxable income, earnings before tax. So kung mababa yung EBT, earnings before tax, kung bumaba siya because mataas yung interest, no? bababa yung tax. However, the danger there again is if the company is unable to pay its obligations, no? Including interest obligations. Okay? So, role ng finance yan. Hanapin yung isang level ng pagkakautangan o debt ratio where the company is able to finance its projects, and also the company has available funding, financing for whatever investment it will undertake, and the company is able to pay its interest obligations, because that's very important for the company to maintain a good credit standing, credit record. Kasi alam niyo, yung mga banks and yung mga credit card companies, mga financing institutions, nagsishare ng notes yan, no? Okay? So, to protect themselves, nagsasabi din sila kung kung may mga say mga non-paying na mga ng mga borrowers. That way, no? That way they're able also to protect themselves, kasi baka punta lang kung kahit kaninong bangko o kahit kaninong nagpapahiram. Okay? So companies do have an association where they're able to give a credit score or a credit rating to borrowers. Okay? So we have here yung times interest earned, sabi natin, mini-measure nito kung capable ba yung firm na bayaran si interest expense. Ito naman, bayaran si fixed payment obligations ng company. Okay? All right. Pause again for a while. Class, clear ba so far yung discussions natin ng debt ratio? Any clarifications? Any questions? Okay, good. Thank you. Thank you, class, for the feedback. Yeah, very good. Okay. Okay, next. Another type of ratio is profit. How efficient is the firm in using its assets to generate sales and to generate profitability? Okay. First, profit margin. Ano yung profit margin? Well, profit margin is simply your net income after tax. Magkano yung net yung income after deducting all the costs, no? Whether it's operating costs or financing costs. So net income after tax over your sales. Okay, let's do this. Notice these are period costs, and pareho silang period costs, kaya hindi natin kinukuha yung average, no? Kasi net income after tax is for the whole period, for the whole year. Si sales then for the whole period. So okay yung anong yun. Okay yung ratio na yun, di ba? Last time we remember, sabi natin, may mga ratios, katulad ng mga natin, yung mga turnover ratios, di ba? Kinukuha natin yung average. Just go back here. Okay? Sales over average AR, cost of goods sold over average inventory. Okay, bakit natin ina-average to? Kasi these are point-in-time figures. No? Si inventory, kung gagamitin mo lang si inventory ng December 31, that's the inventory at that point in time. No? Pero si cost of goods sold for the whole year. Okay, so mas magandang ina-average natin. In fact, kung may monthly average, mas maganda yun. Kasi it will cover the months. No? Okay, so net income after tax, let's get from our income statement the net income after tax divided by sales. Okay, there. Okay, before I proceed, that's why it doesn't make sense, class. For example, you have your direct competitor, no? Kunyari ang sales niya, let's say 5 million. Okay, 5 million yung sales niya. I should have discussed that here. Okay, let me go back to Tato a bit, no? I don't think I discussed that. Okay, where's Tato? Here. Okay, then 2.2, no? Okay, so let's say our sales was 5 million. And ano ba yung sales natin? 7 million. No? 7 million sales natin. Tapos, si competitor, 5 million lang. 7 million. Si competitor, 5 million. Okay, we might say, uy, mas magaling tayo kaysa ako competitor. Kasi tayo, 7 million sales natin. Si competitor, 5 million lang. Okay, di ba? We can think of that way, no? Okay, not so fast. Guys, sa finance, hindi basta-basta pwede sabihin, we beat company A kasi 7 million tayo. Sila 5 million. Oops, teka muna. Diba? With caution yung mga ganyang individual na titinan mo lang. What if this one, meron tayong total assets ng 7 million. Okay? 7 million din yung assets natin. Total assets. Okay? 7 million total assets natin. Sila, ang total assets lang nila, 1 million. Okay. Oh, look. Diba? Look, guys. Okay, so who's now performing better? Diba? Naka-generate tayo ng sales sa 7 million. Teka muna. Okay, you cannot say that 5 million, mas magaling tayo sa kalaban, ha? Absolute sense, okay. Mas mataas si 7 million kaysa kay 5 million. Pero, ilan lang yung asset base ng company kalaban natin? 1 million lang yung asset nila. Diba? Nakapag-generate sila ng 5 million na sales. Tayo 7 million sales natin, tapos yung assets natin, tapos 7 million sales natin. Oh. Who's talking now? Diba? Class, kita nyo, ha? So, be careful in coming up with assessments as to who is better. Our company is better kasi 7 million sales natin compared to them na 5 million. Okay, that's only half the picture. Eh, may 7 million na assets tayo. Ibig sabihin, ang tato natin, 1 lang. Diba? Ayun, no? Tato natin, magkano yung sales na na-generate natin sa bawat piso ng ano? Sa bawat piso ng asset na ininvest ng company. 1 lang. Okay? Si competitor natin, 5. Of course, ini-exaggerate ko to. No? Pero that just to make the example glaring. Diba? So, huwag tayo titigilin ng isa. Masasabi lang natin, the company generated more sales. 7 million as compared to the competitor. Pero may ano yan, may what do you call that? Merong caveat, no? May warning. No? May caveat yan. May however yan. However, this was generated using total asset base of 7 million. While the direct competitor used only 1 million na asset base. So, in terms of TATO or even in terms of FATO, the direct competitor was letting our company eat the dust. No? Kumaga parang nasa tail end tayo. Lahat ng alikabok ni direct, taking it from the analogy of a car, no? Or a sasakyan. Nasa tail end tayo ng direct competitor natin kasi they outperform us. No? Okay? Clear yon, class? Okay, chat muna ulit. Clear yung example kunyari ng hindi ko na-discuss sa TATO, sorry. So, in particular, generally, yung be careful in just using one ratio to say that the company outperforms another company. Okay, good. Thank you. Thank you for those feedback. Okay, that's very good. Okay, very good. All right. So let's now go to our profit margin, which is, sabi natin, it's net income after tax. Gawin natin tong ano. Let's make this into control 1. Okay, hindi na lang. Dito na lang. I'll copy. Oops, mali. Okay. Copy ko to the right. Okay. So take a look at this. Noong 2019, sa bawat piso ng sales, kumita yung company ng 3 centavos. Okay? Yun ang profit margin natin. 3 centavos ang kinita sa bawat piso ng sales. Or, so for every 100 pesos of sales, the company earned 3 pesos. In 2020, disastrous, no? Kasi sa bawat 100 pesos na binenta natin, 2 pesos yung lugi, no? Lugi tayo ng 2 pesos sa bawat 100 pesos na binenta. And then naka-recover nung 2021 sa bawat 100 peso na sales, the company was earning 4 centavos, 0.04 centavos. So, In terms of trend analysis, okay naman, nag-i-improve yung performance ng company. So naka-recover siya noong 2020, no? Tapos mas mataas na siya noong 2019. Okay, based on horizontal analysis, no? Okay to kasi tumataas na, no? And there was a big rebound from 2020. However, okay, in terms of benchmarking with a direct competitor, wala. Sila 3.6 yung ano nila, yung profit margin. Ano ibig sabihin nito? Okay, this means that for every, parang may mali ito, no? Okay. Hindi siya pwedeng 3.6 eh. Kasi ang ibig sabihin ng 3.6, sa bawat, pwede rin naman, no? Sa bawat 100 pesos na sales nila, hindi. Sorry guys ha. Kindly make this, okay, kaya medyo nagulat ako, no? Ito, dapat 0.36 yan. Okay, typographical error yan. 0.36. Okay, what does that mean? What does that mean? For every 100 pesos of sales, the company was earning 36 pesos profit nila. Nakabenta siya ng 100 pesos, 36 pesos dun yung profit margin niya. Profit, no? 36%. Ito tayo 4% lang. So ano ibig sabihin? For every 100 pesos, kumikita lang tayo ng 4 pesos. So 9 times more efficient, more effective, more profitable yung direct competitor natin. Okay, imagine 36 pesos to for every 100 pesos of sales, tayo 4 pesos lang for every 100 pesos of sales. Okay? So malaki yung malaki yung difference, no? Okay. All right. Sige, this time I'll ask you, no? Ano yung basic earning power? Kayo naman nga what's the formula for basic earning power? Okay, kindly check that. Sige, I'll let you research on the formula. Bakit siya basic earning power? Ano ibig sabihin nito na profitability ratios? So kindly chat class kung ano yung kahit kasi may mga complicated na formulas. Yung pinaka lang simple na formula ng basic earning power. Okay? All right. Okay, so related siya sa no? Saan related to? Si basic earning power. Related siya kay Tato, di ba? Alright, kasi si Tato, yung total asset turnover, it's your sales over your average total assets. So ito naman, si basic earning power, ang tinitingnan natin, not the sales, okay, but rather the EBIT na. No? So yung mas mababa na. So magkano operating profit? No? Magkano yung operating profit na kinikita sa bawat piso ng total asset na generate? Yung Tato, magkanong nabebenta sa bawat piso ng total asset na ininvest? Okay? All right. So the formula here is EBIT divided by TA. No? Copying ko lang ito para hindi ko na isulat. Control C. Right. That's correct. Okay. So it's our EBIT divided by total assets. And as I said, pwede natin ma-relate dito yan. No? Dito. And we're going to use also average kasi average. Kumpletuhin ko na lang para total assets. Okay? So similar siya sa Tato natin, no? Ito. Average total assets. Ang difference lang ito, parehong income statement yung tinitingnan. Pero, siyempre, mas malaki yung net sales kaysa sa EBIT. So let's compute for that. So this will be, we will get the operating profit, operating margin, EBIT. This is, remember, another name for this is operating profit or operating margin. divided by the average of our total assets. Okay, total assets is okay, EBIT divided by our total assets. Okay, parang naka-percent pa. No? Okay, so copy to the right. Okay, and again, sorry guys for the typographical mistake here. This is 0.178. Okay, so what does this mean? Earning power natin. Okay, magkano yung ano? How much operating margin? Yun ang earning power. Basic earning power. Sa bawat investment ng piso ng company, how much operating profit did the company generate? Of course, the higher to the better, no? Kasi ibig sabihin nun, mas mataas yung operating profit nila sa bawat piso ng total asset na ini-invest, no? So, 2019 it was 14 centavos for every peso of asset. And then 2019 talagang affected, no? Bagsak talaga. 0.01. And then noong 2021 naka-recover naman, naging 0.16. So among the 3 years ang pinakamalaking basic earning power is in 2021. But it pales in comparison. Okay, let me just do it. Gawin ko na lang 0.18 no, to round it off. 0.18, mas malaki yung yung basic earning power ni direct competitor compared to our company. Okay, so let me pause for a while and let me just check, class, if okay yung ano natin so far. Feedback, please. And I'll give you a few seconds to catch up if you're not able yet to get those values. Please feel free to ask. Representation nung, okay, yung formula or representation, sinong nag-question nun? Okay, Jeremy, what do you mean, the formula or ano, or the meaning? Okay, meaning. All right, yung sa meaning class, you base it on the formula. Kasi ito, EBIT over average total assets. So what's the meaning of 0.16? Okay, you can either make the denominator as 1 or make the denominator as 100. Napapansin nyo, ginagawa ko yun, di ba? Kaya gawin ko 100 yung denominator, which is average total assets. So for every 100 peso ng total assets, ng asset na in-invest by the company, the management was able to generate 16 pesos of operating margin or operating profit. Okay? Kasi ginawa kong over 100 yung total assets, so therefore ito magiging 16. But if I take a look at this from the perspective of 1 peso of asset, so for every 1 peso of asset, the company was able to generate an operating margin. This is your EBIT, di ba? Operating profit. Hindi siya yung net income after tax class, remember. Hindi siya yung profit margin. Okay? Iba yung operating profit margin sa profit margin. Ang operating profit margin is EBIT divided by sales. Ang profit margin is net income after tax over sales. All right. So for every 1 peso of total asset invested in by the company, it was able to generate an operating margin or an operating profit of 16 pesos. 16 centavos. 16 centavos. Or if I want to express this in terms of pesos, for every 100 pesos invest in assets, the company was able to generate 16 pesos of operating profit or operating margin, which is your EBIT. Okay, is that clear, class? Kindly chat please kung okay, thank you, Jeremy. The rest, please kindly chat please if okay so far yung interpretation, explanation. Okay, good. All right, so a few more. I think we hopefully will be able to finish this. All right, return on assets, return on equity. Again, I'll ask you to find the formula. May technique yan kapag return on assets, no? Return on equity. Anong formula ng return on assets and return on equity? Pag return, ano siya, class? Return on assets, return on equity. Class? Okay. All right. You got the answer, no? Ang tinatanong dyan, no? Unlike yung profit margin, ang tinatanong sa profit margin, magkano margin, no? Magkano yung kinita natin sa bawat piso ng binibenta natin. Okay? That's your profit margin. On the other hand, yung return na to, return on assets, as the name suggests, guys, pag return on any amount, on any account, yung denominator, yung nasa yung nagre-return nun, no? So therefore, kaya nga sinabi nyo dito yung di ba yung formula? It's your net income after tax divided by your total assets. And once again, net income after tax divided by net income after tax divided by, since ang natin, ang kino-compare natin is a period figure, period period amount. So average total assets, we have to average that. Okay, so let's do that. And ganun din sa return on equity, no? Sa equity naman, kino-compare natin siya sa bawat piso ng contribution ng owner. So yung total equity. So this one is your net income after tax. Okay, net income after tax divided by average ng total assets natin. Okay, I'm getting 7.9. I hope you are too. Sama na natin si return on equity. Let's see. Copying ko na lang to, no? Net income after tax over average. Papalitan ko na lang tong average ng total equity. This one is total equity. Ay, what happened there? Mali. C24 ba? D24? Tama. Yan. Ay, no. Total assets yung nakuha ko. Dapat total equity. This one. Okay. Okay, got this, guys? So this is equal to total equity. There. Okay, did you get the same figures? Ba't ba ano to? Tanggalin ko nga yung zero. Okay, so anong interpretation ito, class? Again, just take a look at the formula. For every peso of total of assets invested by the company, the management was able to generate, okay, profits of around 8 centavos, no? Sa bawat piso ng ano ng benta, or for every 100 pesos of 100 pesos of asset invested, the company was able to generate 7 pesos and 90 centavos of profit. Okay, it was better compared to 2019, and of course 2020, kasi noong 2020 talagang bagsak yung ano no yung profitability. So kaya nga naging negative sa 2020 kasi yung net income after tax natin noong 2020 was negative. Okay, the same thing guys for return on equity. Ang tinitingnan natin diyan yung bawat piso na kinontribute ng shareholder, no? Kasi yung equity. So which means that for every 1 peso of of investment made by the shareholder, the company generated profit of 20 centavos. Okay, talo pa nga nila yung direct competitor, no? Direct competitor 18 centavos lang ana generate for every 1 peso of equity invested. Okay. Yung pinakamasama yung 2020 kasi dito yung nagsimula yung okay. Pinakamasama nung 2020 kasi dito yung negative yung nila yung net income after tax. Okay, kaya negative yung ROE nila. Okay? All right. So once again, I'll pause and maybe you're following with the formula or okay. So once again, may I ask your feedback? So far clear tayo?
Sir, question po. Just to clarify po, yung sa profit margin is for every 100 peso of sales, the company earns 4 pesos. Tapos sa basic earning power po, 100 peso of total assets, the company was able to generate 16 pesos of operating profit. And then yung return of assets.
Yes. And then
sa return of assets po, for every 100 peso of assets invested, yung nag-generate po na profit is 7.9. And then sa return of equity, for every 1 peso investment made by the shareholders, the company was able to generate profit of 20 centavos.
Yeah. So ano ko yung format nito para pareho. Okay? All right. So if we look at it in terms of 100 pesos, no? So para pare-pareho interpretation natin para comparable, no? So balikan natin. Kunyari yung profit margin. For every 100 peso of sales, okay? So since si sales ginawa kong 100, ibig sabihin nag-times 100 ako kay sales, isa times 100 ko rin to, no? So magiging 4 pesos yung kinita ng company. Okay? So nagbenta sila ng 100 pesos, the company earned a profit, bottom line profit na yun, no? Hindi siya operating profit, ha? Bottom line profit na. Natanggal na natin lahat yung interest pati yung taxes na tanggal. Ang kita ng company is 4 pesos. Or you can do it in terms of, di ba, peso, di ba? For every peso of sales, the company earned 4 centavos. Itong figure na to. Okay, sa basic earnings power, ang denominator natin yung assets. So once again, I'll make it 100 peso of assets. For every 100 peso of assets invested in assets, for every 100 pesos invested in assets, the company generated 16 pesos ba, of operating margin. Yung EBIT natin, di ba, operating profit yan or operating margin. Okay? So, nag-iiba yung interpretation, therefore, based on the formula, what that ratio stands for. Okay? Ito, return on assets, 0.08. Ano ibig sabihin nun? For every 100 peso of assets invested in assets, the company generated 8 pesos of net income or profit, no? 8 pesos. Bakit 8 pesos? Kasi I have to multiply this kasi si assets dito in-interpret ko as 100. Pero if I interpreted this as 1, for every 1 peso of asset invested, the company generated, okay, ilan? For every 1 peso dito, the company generated 8 centavos, no? Or 0.08 pesos of profit, net income after tax. Okay, clear, guys? Clear? Feedback naman please kung clear so far yung interpretation ng mga yan.
Ay, sir, last question po.
Yeah, go,
For the
go.
return of equity, ganun din po ba? Like, if 100 pesos, 20
Yes.
po yung ma-generate
100
na
pesos,
profit.
20 yung profit na ma-generate. Yes, correct.
Okay po. Thank you po.
So, consistent naman yung pag-ano natin, no? Consistent yung pag-interpret natin. And you have the option to peg it at 100 or at 1, no problem. No problem. Okay, next. Sige, kayo na mag-research. Per. Tawag dito per, no? PER. Price earnings ratio. So, others call this as the PER. Okay, what's a formula for PER, class? Waiting for your answer. Okay, it's share price divided by the EPS, correct. So this formula is correct. So PER. Control C. So capital ko nga pala. Share price divided by your EPS ko na to, no? Okay, EPS is earnings per share. Okay, then we interpret. So, okay, let's see. So, given tayo, okay, given tayo ng, ito yung EPS natin, ano? This one. Okay, this is earnings per share. And negative tong 2020 kasi nga, negative yung earnings natin. So this is net income after tax divided by number of shares outstanding. Yun ang formula ng ng EPS. Okay, so asa na yung price niya? Ito pala, nasa taas. Sorry. Okay, so we have the stock price, no? We have the stock price. Okay, and then we have the earnings per share. All right, so what's the formula for the PER ratio? Okay, so this is equal to, the stock price is given above at, it's selling now at 12.17, no? At that point in time. 12.17 divided by our EPS is this one. Binigay ng EPS. Pero how do you compute for EPS? EPS is Anong computation ng EPS? Net income after tax divided by average number of shares outstanding per share. Ilang shares ba ang outstanding? Okay, then we can walang ano. Kasi ang formula natin ito yung price divided by EPS. Wala tayong price ng 2019. Wala yung price ng 2019 kaya ito. Kaya empty siya. All right. So how does it compare? Ano ibig sabihin ng price per earnings ratio? So kung titingnan lang natin class yung yung formula lang, ang ibig sabihin niyan for every 1 peso na potential profit mo, yun ang earnings per share, no? So if you have 1 share, yun yung earnings mo from this company, yun ang EPS. So yung share price, yung PE ratio, yung per, it tells us of how much you should be paying, okay? How much you should be paying in order to expect 1 peso of earnings dun sa company na yun. Okay, you got it, guys? How much should you be willing to pay for a share of stock for every 1 peso of earnings that you generate, that you get from that company? Okay, so ano implication? In terms of per, which is more attractive? Yung company natin o yung direct competitor? In terms of per, sino yung mas attractive? Sige nga. Class, pakichat nga please. Which company is more attractive based on per? A, lagyan nyo A if it's our company. B if it's the other company. Okay, so si Roger may A, our company, Francine A. Okay. How about the rest, guys? So si Roger, si Francine, ang answer nila A, yung company natin. Okay, si Milford, ganun din. Okay, let me ask you. So, Roger, kindly unmute yourself, please. Why did you choose 12.05?
Hello, hello.
Yes.
Am I audible po?
Yes,
Sir,
you're audible.
because from your explanation, it's how much you should be paying to expect earnings from the company. And
Yes.
since our company is only 12.05 compared to 14.2, I thought our company was cheaper compared to our competitor
Yeah.
po.
Got it?
Which is why I
Yeah.
would decide to invest on our company.
Correct. No? So, perfect, no? Thank you so much. That's correct. Kasi, the higher the per, the more expensive. Kasi imagine, di ba, kunyari yung direct competitor, 14.2 siya. Ibig sabihin, sa bawat piso na kikitain natin doon, based on earnings per share, you have to pay, you'll be buying it at 14.2, 14 pesos and 20 centavos. While on the other hand, yung company natin around 12.1 pesos and 10 centavos. That will be the cost to you in buying that share of stock in order to earn 1 peso. Yun ang per ratio. Okay, so just in terms of that, no, yung per ratio, mas okay bilhin yung company natin. But of course, for financial analysts would not stop there. Holistic yung the other ratios, ano yung mga prospects, ano yung mga potential for the company to grow, potential for the company to generate cash flows in the future. Yun ang tinitingnan, no? Kasi hindi pa pwedeng isa lang tingnan. Okay, while it is true that in isolation, mas magandang company yung sa atin. Kasi pareho naman yung kikitain nila, yung EPS. Okay, sa bawat piso na EPS nito ng direct competitor, bibili tayo ng magbabayad tayo ng 14 pesos. Samantalang dito 12 pesos lang. Okay, so I hope that's clear, guys. The higher the per ratio, the more expensive the company is. Okay. Tingnan nyo nga, guys. Sige, tingnan natin na. What is the per ratio of Globe and Smart? Sige nga, can you check, right? Plus now sa internet. What's the per PER ratio, price earnings ratio of Globe, and tingnan natin, compare natin sa Smart o kaya sa PLDT. Can you check please sa sa internet? Okay? Wala pa? Formula class ng price to cash flow ratio. Wala, hindi mo nakita yung sa Globe at saka sa PLDT. Tapos at the same time, tingnan nyo na rin yung formula ng price to cash flow ratio. Okay, yan. Thank you. Nakita ni Roger, no? Roger, can you share the link? Si Jeremy din. Para your classmates can see it. No? Si Jeremy pala na una nagsabi. Thank you, Jeremy. Thank you, Rog. Can you share, Jeremy, the link? Si Globe daw, 14.94. Si Smart, 4.91. Si PLDT, 9.82. No? Okay, yan ang mga per ratio nila, no? Price earnings ratio. So, sino pinakamahal dyan, class? Of course. Okay, thank you, Jeremy then. Si Jeremy, kindly take note of the price to cash flow ratio. Okay, and the most expensive is Globe, di ba? Jeremy or Roger, can you share the URL, yung link kung saan yung nakuha yung yan, okay? So you may wish to get that, class. Yan. Copy nyo yung URL na yan para makita nyo rin kung saan nila nakuha yung per ratio. No? For the benefit of, kasi ibibigay ko tong copy din sa inyo, no? Control C. So let me just put it here so that others, Control V. Ayan. So what did we find out, class? Sinong pinakamahal? Pinakamahal si Globe, di ba? Right? Tapos yung okay. Globe is 14.94, Smart is 4.91, and PLDT is 9.82. So in terms of attractiveness to investing, Smart seems to be the best alternative dito, no? Kasi siya yung pinakamura, no? Okay? Siya yung pinakamura sa bawat 1 peso na earnings na you expect to earn from that company. You need to pay 4.91, no? To get the smart share of stock. Okay, so wala ito. Okay. All right. Then let's move on to price per cash flow. Yung una, ang tinitingnan natin, price per earnings per share. Ito namang isa, price to cash flow. Now, let me check if nabigay ba natin yung okay, ito. Good question, no, Francine. All right, paano yung negative? Okay, paano paano ina-interpret? So, class ito, this is uninterpretable, ano? It doesn't make sense, guys, to say that negative yung cost, no? Negative yung price. So if it's at a net loss, we cannot really put an interpretation to the price per earnings ratio. Okay, kasi ang ibig sabihin nito, or well, loosely we can say that sa bawat 6 pesos na pagbili mo ng ano ng ng stock na yon, malulugi ka ng 6.32, but that's not accurate. So normally we don't interpret yung negative na ano, no, negative na per ratio. Okay, that's a very good question. Okay, nawala. Saan na yung ano ko? Oops, where is that? All right, so did that answer your question, Francine? Okay, and I hope you saw the question of Francine. Napakagandang question yan.
Sir,
Okay, good.
question po.
Yes, go ahead.
If, di ba po, like dun sa 2021, parang you said po na for every like 1 peso of earning, you need to pay 12.05. So, the lower the price earnings ratio, the better po. Kasi mas, meaning nun, mas konti po yung kailangan mong parang i-shell out na
cheaper
money.
siya. Oh,
Mas
cheaper.
So, kapag negative po siya, parang does it also mean na parang better na bumili ka ng shares from that company para in the future, if ever ma-project mo po na tataas po siya, parang mas konti po yung shell out nyo na money, tapos mas malaki yung makuha yung price earnings.
Sorry, I lost thread of yung last part ng question mo. So you're
Ano ba,
saying
like-
na mas magandang bibilhin ngayon.
Like nung 2020 po, since like negative
Okay.
siya, or kapag lower po, compared to now na 12.05 na. Tapos pareho pong 1 peso yung parang makuha yung EPS.
Okay. So in that case, hindi comparable kasi, no? Kasi ang assumption ng EPS, it's an earnings per share. Dito sa 2020, the denominator is not actually earning, no? It's a loss, eh. So parang hindi natin pwede siya ma-compare. Alright? So ang pag per, guys, ang assumption natin, the company was earning money. Okay? So that's why sabi ko rin kanina, it doesn't make sense to interpret yung negative per, no? Kasi when we compute for the price earnings ratio, ang gusto natin malaman, magkano yung magkano yung bibilihin natin, magkano yung isi-shell out natin to get 1 peso of earnings. Okay, since nababiolate na kagad yung yung denominator, hindi naman siya earnings, loss siya. Okay, so mawawalan ng saysay yung the interpretation becomes of no consequence, no? Parang it became moot, no? Parang wala siyang bearing, or let's say it doesn't make sense to interpret it, kasi ang para sinasabi natin diyan na bibili mo yung stock for every 1 peso loss, no? Diba parang wala namang gumagawa ng ganun. So, and strictly the per is really it measures really magkano ba talaga ang cost ng pagbili ng stock na yan kung kikita tayo diyan ng 1 peso. Alright? Kasi kung loss yan, syempre technically you would not want to buy that stock kung nag-loss siya at that point in time. Kasi that will send a strong signal na wala, na lulugi yung company. So why will you buy that? Okay, so medyo tricky yung yung per na negative, but analysts who do that, no, ang nila, they will avoid interpreting that. Kasi ang gusto natin 1 peso of earnings, eh. Magkano yung price per peso of earnings, no? Okay?
Okay po, gets po. Thank you po,
All right,
sir.
sige. Thank you. Thank you for that very good question. All right. So dito naman sa price to cash flow, I think binigay sa atin yung cash flow per share. So cash flow per share is just your net cash flow. Okay. Hindi binigay yung cash flow per share. Okay, hindi nabigay yung cash flow per share. Okay, let's just get it from the net cash flow, no? So ang net cash flow natin, 'di ba ginawa natin yung ano nito? Wait. Nabigay ba yung number of shares? Kulang yata ako dito ng ano.
Given po yung number of shares.
Ito number
yung
of shares. Ano?
250 po.
Yeah, okay. 250. So magkano yung ano natin, yung net cash flow natin for 2021? So let's see. So this is equal to net cash flow. Where is my hindi ko makita. Wait class, ha? Hindi pala tayo nag-cash flow dito, no? Okay. Anyway, so mako-compute natin yun. Net cash flow natin is the sum of your okay, your net income after tax. So net income after tax natin is this one, okay? And then add back yung depreciation, di ba? If you recall, guys, when we were computing when we were preparing the statement of cash flows, we start with net income after tax and then add back depreciation to get your net cash flow. So this is your net cash flow, and then we divide it by so yung cash flow na to, yung net income after tax is for the whole year, ganun yung depreciation. So what we do with the number of shares is also to get the average. Dapat ina-average niyan. Kasi especially pag nagkakaroon ng changes. Average ng 2021 and 2020. There. So let me show that. There. Okay, so that's the formula, no? Wait. Okay, ang kulo ng konti. Ay, time na pala. Ako, sorry class, no? Sorry. 11 to, tama, 12:30. Oh, time na pala. Sorry, I apologize, no? Can I have just one last minute? Tapusin lang natin to. Ito lang, no? Pati itong huli, no? And then yung next time na lang. Very sorry for that, class. Okay. Yeah, o nga. Oh, thank you for reminding me. Hanggang 12:30 lang. Okay. O nga. Sorry, hindi ko nakita yung time, no? Honest mistake. I have just a few seconds, no? So ito guys yung yung price to cash flow ratio 2.1, and talon-talo tayo, no? Wait. Dito class, again, pareho ng per to, no? So mas mahal yung yung sa competitor natin. Kasi sa bawat peso for every 1 peso of cash flow, operating cash flow that we get from the company generates, we have to pay 2.1 pesos. Si direct competitor, 7.6. Okay, and then yung last, market to book value ratio. Iaano lang natin, no? We'll just compare yung market, magkano yung price per share, which is ito 12.17 divided by the book value per share, this one. There. So that's the market to book value. Okay. So ito, magkano yung market value niya, and then comparing it with the book value, the higher the better. Ibig sabihin, yung price ng company, yung capital appreciation niya, mas lumaki na. Si direct competitor natin 2.9. So ibig sabihin, kung i-compare natin yung book value dun sa market value, yung price sa market na yun, mataas, which is good. So talo tayo in terms of market to book value ratio. Pero in terms of per at saka yung price to cash flow ratio, mas mura yung company natin compared to the direct competitor. Okay, so let me stop recording now.